Yo, what's happening, legends? Thank you so much for joining me here today. We've got a few cats in the chat. Zalani Jasana, thank you so much for joining. Free Will, Joanne Woods, of course, thank you again for joining. And Chesum. Guys, yeah, second stream on the new channel. Expected to be a little bit rough, a little bit rusty, just in streaming in general. But I'm excited to kick it off with you guys. I'm excited to continue building up the Charts Are Dumb community and brand and message just in general. We've got a few cool things coming out over the next couple of weeks and whatnot. We'll probably launch out a new Telegram group as well to give you guys signals off stream, and a few other cool things. But for now, we're taking it slow. We've just obviously set up a little bit of a schedule so I can go live with you guys pretty consistently. And that's Monday, Wednesday, and Friday. And then obviously, if anything crazy happens in the market, of course, we're going to hit it live as well and try catch some trades. Today is quite a volatile day. We'll go through the charts and everything today as well. But it is quite a volatile day. We saw Bitcoin shoot up to just under 61,000 and immediately retrace back to sub 60,000. Slower time frame, of course, I'm referring to that volatility on the lower time frame because that's where we're going to spend most of our time, especially during these shows in terms of live trading and trying to grind up this account, which you guys can see on the top left side over here. The account's currently on $99. I was doing some testing on the platform, so I lost like 50 cents. But we're going to try grind up that account as much as we can and just really have fun. I'm obviously not going to take it too seriously. I'm really going to go back to like the raw trading elements and kind of put myself in that state where we're testing out new strategies, which I think I found a couple with these new indicators and just really trying to see what we can do with that money and not take ourselves too seriously, right? The channel's name after all is Charts Are Dumb. And yeah, we'll just have fun with it. I think also, as I said in the last stream, if this is your first stream joining us, please make sure that you're hitting the like button, of course. Very, very important to me, and it helps push out the content and helps us build up this community because we are starting as a little bit of an underdog in the space, right? Kind of going completely bootstrapped from the beginning, and building up this community from scratch again, which I'm excited to do. Of course, it's a new chapter. But yeah, obviously the whole idea behind this is just going back to raw trading, not really worried too much about the news and what MicroStrategy just did with putting 1.15 billion into their Tether reserve, even though it's a little bit of news. Like, we're not going to focus too much about that, and what that could mean for the charts. It's really just going back to pure charting, pure analysis from that point of view, whilst kind of maintaining a general understanding of what's going on in the world, right? Obviously, if there was some escalation in the war and oil prices started rampaging again, we don't want to be positioning ourselves too bullish or over leveraged towards the upside, just generally speaking. But the show is definitely not going to be focused on all of those narratives and just chasing that shiny object. I'm not doing a lot of preparation for the show. In fact, minimal preparation, so that when I'm addressing the charts and looking for these opportunities, it's from a raw take and it's from a first time perspective, just like you guys would do when you load up the charts for the first time. It just kind of gives me an excuse to be extremely lazy and focus on everything else I'm focusing on, and also at the same time create a more unprepared, unscripted environment so we can do these shows and have some fun. Bitcoin, obviously a very, very interesting level now. We'll take a look at the charts from that perspective on the higher time frame. Just relative to any changes that happened last week, is we did get the first weekly close below the 200 daily weekly moving average. So it's kind of a big deal, right? It has historically been a pretty heavy level of support or bullish validation, right? In the last cycle, we saw the breakdown below. Bitcoin continued to reject another 29%. In 2018 cycle, or that 2019, going into 2019 region, we actually found a bottom and the retest of that. And obviously, as you guys can see with these examples following that, it has been a very, very strong level. We fucked around a little bit from 2022 to 2023, but now kind of seeing that break below, to me, not a massive end of the world kind of environment. Bitcoin is volatile. That's just the name of the game. These things are always to be taken with a little grain of salt. Given the liquidity of this asset, all the manipulation that actually still goes on in the crypto spaces through these exchanges. So we're going to be very careful of, kind of having this super high conviction that the market is just going to continue to dump. But we are prepared for that downside either way. For these shows, of course, as I said, I'll give you guys some higher time frame perspectives, some general direction and some trades on that to hold. But these shows are obviously going to be more focused on how we can try turn a profit. And if we do find a trade, try find that during the stream time. And then just kind of give you guys a TP and SL to let it run, because the stream's only going to be like 45 minutes to an hour at most. But guys, yeah, if you're in the house, I need to just try bring up these comments again. Just give me 1 second. Just bring this over here. Make sure you guys are trying to engage as much as you can. Or if you have anything to say, any questions, any chart that you want to drive attention to, just let me know. And I'm sure we can take a look at, everyone's charts, especially because the community is so small now. But it's good to have everyone here. Of course, we originally had the Crypto Legends community, which we retired, on the transition from the previous company. And now we're just really having fun with it and kind of building our own brand and our own voice in the space, which will follow with its own products and everything of that nature as time goes on, right? One of the products, it's not going to go live. It's not going to be public for, quite a decent amount of time at the very least, but is this platform here, which is just a really custom trading interface for myself, and just to kind of be a little bit more informative on the things. So for me, for example, I like to trade on fair value gaps. I like to trade on liquidity swings, etc. And I then decided, I'm going to build all these indicators in so you guys can visually see what it is that I'm talking about when I refer to these things. So I don't have to draw out every single example, these being all the fair value gaps. And as such, right, you'll obviously catch along as the trade's gone. And then obviously we can do our quick execution here. And it allows me to show all the active positions in the top left section right there, as well as the current balance, right? We're starting at $99. We're going to try slowly grind it up at a realistic rate. I'm not doing 100x leverage. I'm not trying to get the account to $10,000 in the first couple of weeks. We're going to do it realistically. We're going to treat the account as if it's our total capital and just kind of slowly get those returns and, maybe not overestimate what we can do in a week or 2 weeks, but, not underestimate what we can accomplish over a month or 2 months or whatever. And then the guys who are obviously first in the community and do have the $100 and are trading alongside me, obviously don't have any links to promote you or anything, but you kind of stand to benefit the most if we are successful, right? Now, obviously, before I go in, I am on YouTube now, so I'm assuming there's a lot more guidelines and a lot more, terms and conditions. So I'll start the show off. I do have like a whole bunch of things that say not financial advice, but guys, we are trading for fun, right? This is entertainment purposes. I don't know what the market's going to do on a minute-to-minute basis or 15-minute to 15-minute basis. So you got to take everything as an educational opportunity and not as financial advice, right? I actually don't recommend you copy any of the trades and just kind of stay for the lessons. Do you still feel like Casper for the next bull run, or do you think something new will come around and capture attention and capital? This was your view last bull run. Yeah. I did think that Casper would perform well, and it did perform pretty decently in the first half of the bull market, like 2023, going up until its later parts. For me, it was great. Obviously, at the time, did it do what it was supposed to do, or did it capture enough attention? Definitely not, right? It was like the exciting token for that period of time, just when that narrative was hot of digital silver and new layer ones coming onto the block in general. Right, what we saw was Sui, which was a very, very exciting project at the time. Say, Aptos, Ton, the whole list goes on. But just as a general concept for the cycle, or general idea for the cycle, is it was disappointing across the board. If you prioritize or you spent a lot of time in the meme coin space, of course, especially if you got lucky in that space or really understood that space more than most, that would have been a great place for you this cycle. But generally speaking, also if you were a news trader, right? If you were able to adapt to the different narratives as they were coming out, but it's a very, very different cycle that we had in 2025, 2024, relative to what we had seen, obviously, in prior years, 2021, right? That was just like a massive liquidity rush. You had money printing through the roof after COVID, like everyone locked down inside, just jumping into any narrative that popped up on the day. And you had a much higher likelihood of making money. And at the same time, the space was significantly less diluted than it is today, right? People can launch projects and will continue to launch projects at rapid rates. And I think that dilution is why we didn't see a lot of focused liquidity and strong movers in more valuable products. It tended to be more hype driven cycle this time. And I think it's just part of the crypto life cycle. I think that it may have done a lot of damage to those projects like Casper, like the new projects like Seisu, which did raise a lot of capital and really not gain the attention that the investors had hoped for, whatever. And yeah, I mean, even across the board in your classic tokens, last cycles, DOT, FTM, all that shit really failed this cycle dramatically. And I would even, I'd even consider Solana a little bit of a failure this cycle. From a return perspective, from cycle bottom to cycle high, great, right? $8 up into 300, great trade. But when we're looking at a multi-cycle hold perspective, nothing really was worth it bar Bitcoin for high net worth individuals, right? As a regular trader and a regular holder, holding Solana, holding Ethereum, it hasn't been the most exciting last 8 years. And I just think it's indicative of where the space is right now, right? Generally speaking, what's currently happening, and it's very obvious to say, is that the excitement had drifted towards AI, right? That was the topic of the cycle. And crypto kind of tried to find its space in there. But it's not the exciting technology. It's not where the eyeballs were. And then as a result, liquidity was a lot thinner than it was, relatively speaking, to the previous cycle. And anything that was exciting this cycle was around ETFs, right? So your major plays like Bitcoin and institutional driven narratives. And outside of that, it was just a whole gambling fest like we see every cycle. In the previous cycles, obviously NFTs. This cycle was a little bit more focused, right, so to speak. There were returns, but not super fantastic. Solana, obviously, from an unlock perspective, did reach a higher valuation this cycle, but from a price perspective, where the points that we actually care about really didn't. And there was a lot of tokens alongside, Casper, from a fundamental perspective, that probably should have done a little bit better, or probably we were expecting to do a lot better. One of the disappointing ones to me was Arweave, specifically going into the AO token launch and their supercomputer on that front. I thought that would do a little bit better. But yeah, it is what it is. We move on. I think that next cycle is going to look even more different than the current one. Specifically looking at the current performance in Bitcoin and what we're potentially anticipating with such a significant move towards the downside. Bitcoin's now current circulation is a lot more, I don't want to use the word centralized, but a lot less spread up, right? I can't actually think of the right word for it right now, but it's a lot less, and there's a lot more focus on things like MicroStrategy. I think MicroStrategy is driving a lot of the market narrative in general. And I think a lot of those players get flushed out, right? I think MicroStrategy's business model is kind of being a little bit exposed in these environments, selling Bitcoin, whatever it is that they're doing right now. Obviously, they just raised 1.15 billion and put it into the strategic reserves to kind of protect their dividends. STRC is completely depegged, currently 20% off. So I think there's a lot of like those heavy narratives that are still sitting on there. And obviously to see the conviction of an ETF, an institutional holding, in a more driven or drawn out bear market. But I digress. Obviously, I just kind of preemptively said the show wasn't going to be about news and then spoke about it. Yes, I'm very disappointed. I think a lot of people are very disappointed in how the cycle played out. I think a lot of people, even with that disappointment, are not ready for how the next cycle is going to play out, right? The narratives will change. I think a lot of the tokens that do have a lot of runway from the capital that they raised, with still no adoption, they're going to get flushed out and repriced in the market. I think Bitcoin needs to be repriced, going from a transaction decentralized peer-to-peer network to obviously fully now being priced in as a digital store of value. In my personal opinion, I think Bitcoin's just a waste, right? I think it's an exciting technology. Blockchain technology in general is very exciting, but I think that Bitcoin's just kind of a waste, right? I never really been bullish on the whole Bitcoin narrative. I think of a store of value, it's not very necessary. But yeah, we'll see what happens. I just don't know if Bitcoin finds market fit at that current narrative, and not being as excited about the technology or the technological future of Bitcoin specifically, and then just crypto in general. So let's see what happens. But yeah, the token inflation on Sol was insane. It did well for the millions of Sol that hit the market. Correct. Cool, guys. Let's get into it. So one of the new strategies I'm looking at, it's just something I'm playing around with right now, and that's really about a liquidity swing and then retracement into the POC of a volume profile. So that sounds hyper complex, um, but it's not necessarily that complex. Okay, so a liquidity swing is obviously a squeeze of liquidity. It's a flush, it's a sweep towards the upside, and I have the indicator right here so you guys can see. This was obviously your liquidity high. We had another liquidity high at these points. As you can see with this indicator, which is also available on TradingView, so you can just pop it up and check how it works. But they basically highlight these pivot points in the chart, right? A lot of people look at them as market structure shifts, right? That's not the exact example, right? Liquidity sweeps and stuff is not always correlated to market structure shifts, but they're basically a break of liquidity structure, right? So if we see a high break a previous high, in a lot of cases, that would be that sweep, right? But that high is going to be set after certain liquidity parameters are reached, right? So you can see on this indicator here, how we look at this is just, this is the wick extremity, right? Which is the high wick, and it shows you exactly how much of liquidity or how much of that asset was traded during that candle thing. And that's kind of what sets it, right? That's why you don't have things over here. You don't have things over here. It's set by these market structures and the amount of liquidity that's traded, right? That's like the beauty of the indicator. So it highlights these features. The strategy as it follows is, after we have that sweep of liquidity, the market tends to, right? It's obviously just something I'm kind of exploring. It's maybe a very strong indicator for a lot of other traders. So maybe to them, I sound absolutely dumb for never seeing this before or never knowing about it before. And it's probably also successful in different formats, right? So you'll notice with a lot of trading strategies, they don't always correlate in definition, but they have the same overall idea, right? So there's a few guys who do like market structure shifts and then they wait for 50% retracement. That could kind of technically correlate in a lot of entries to what the strategy is. And in this example, of course, we're looking at the liquidity swing over here. We obviously sweep the level, then retrace back into the POC. The POC is the high volume point. Okay, for those of you guys who don't know, the difference between volume profiles and regular volume is more of an intra-candle perspective. A profile is more of an intra-candle perspective. And that's how much volume is built at every single level within that candle. Okay, so volume is, in general speaking, volume is on a per candle basis. So it's from a time frame perspective. If we use the volume indicator right here, and obviously, guys, volume bars is a feature on every single exchange or every single thing. So make sure you're asking me a lot of questions in the chat. I don't want to get too complex. I want to keep it as simple as possible. But volume bars in general, right, which is a very strong indicator for me, it's a massive confluence for me, is based on candle to candle basis, right? And it's adjusted based on the time frame. They're not intra-bar levels, okay? When you do a volume profile, that's associated with the volume built at each price level, right? So it shows you focus points in liquidity, right? You don't want to look at it like on here, you obviously, this volume, this massive volume spike here represents the entire candle move. That's what I was explaining about the volatility in the beginning of the show that we were seeing. And when we're looking at a volume profile, for example, that works on the volume build-up per price point of a year, as you guys can see in the y-axis of here. Okay, so it gives you a little bit more of a focus in liquidity. Okay, someone says, how can they add this to their chart? On TradingView, you have a few options here. So volume profile is your fixed range volume profile. So if I'm trying to establish the volume build-up within this little area over here, I can do this to this, and that will kind of set this POC to where we're currently trading, right? That's the consolidation point in the market. It's a massive order block, and that's currently where liquidity is being built up on this little range over here, and it's on a range to range basis. There's another application as well, which I'll put you guys onto, which is MMT. Now, initially, I wouldn't have actually suggested MMT, but they seem to have put a lot of their stuff going for free, which is awesome. If you look over here, MMTV5 is out. I haven't even seen this one yet. Okay, let's just stick to stay on V2. MMT is also another fantastic one, and they do tend to have a lot more of these things. So we can see volume profiles here. That's for the visible range. They have order book heat maps and stuff. We won't get too deep into it. But I want to try see if I can find. Do they have it? They have TPO. TPO is okay. I guess you could use TPO. That's fuck, I can't remember what it stands for. Time price opportunity. I want to see if I can find it. No, let's look at TradingView here. I just want to show you guys how you can get these indicators. Let's see. 22 fixed range. No, they don't have good ones on TradingView. But there are many applications where you can get this data from. But anyway, it helps you identify where the buildup of liquidity is, right? Where the liquidity is most focused, so to speak. And that's just based on the volume and performance at that point in time, right? So if you have a price point of about $60,000 and we're starting to notice that on a volume profile perspective, that's where the most of the asset is being traded. That becomes a very big point in terms of an order book for market makers as such, right? So that's currently how we look at that, and that's why we use that as a point. It's where that liquidity is being built up. Now, as I said, you don't ever want to go into a trade going into market open, right? Specifically on low liquidity pairs, even in Bitcoin and depending on the exchange and stuff like that, because these strategies tend to break quite often, right? And I know this not only from experience, but even just looking from a bot making perspective, which is something I do every single day, is I'm trying to build out these bot portfolios that I can eventually share at a certain point in time. And we've got some really fucking good ones that are running on some of my accounts as well, which is really exciting. But you'll notice that even with a lot of the strategies going into market open, it sounds like such a basic thing to say, but that's where the strategies tend to break quite a bit because of the unforeseen volatility. So what we're doing now is we're waiting for this market open right now. As you guys can see, Bitcoin not reacting great. This little volatility sweep here, if you are trading on the lower time frame, would have fucked you up pretty aggressively. And yeah, so we're gonna slowly start to evaluate this. Bitcoin in general hasn't been performing too well. We obviously lost the $60,000 support level last week. And just as a result or post that, we haven't really found any bids sub 60,000, right? Generally speaking, what you'd like to see in an asset is when we do sweep such a critical level. In Bitcoin, I am happy to say from a sentiment perspective, your critical levels are your $10,000 increments, right? 40,000, 50,000, 60,000, up into whatever, right? And then obviously 100,000 is a massive sentimental level. Generally speaking, Bitcoin sub 60,000, looking at the previous cycle highs and the current range, as you guys can see in this lower order book here that we consolidated in, going into the ETFs, and when the ETFs were approved prior to going live, this whole range system here is a very important level. Generally speaking, we'd like to see a little bit of a heavy bid being caught as Bitcoin dips below 60,000, but the bids are not there, right? They're not as fantastic as you'd like to see after such a heavy 55% correction in the market overall, right? Which doesn't necessarily mean that we have a guarantee that the pullback is going to continue in the market, but it does create a little bit of concern that, we're not at the wit's end, so to speak. We're not at the bottom of any formation here, right? Obviously, I'm of the opinion, not to dive too deep into it, but Bitcoin will, fall down to $30,000. We're not going to have a very exciting, Q3 and Q4 of 2026, but eventually we'll find a little bottom. I just think we're not very close to that, right? If you go purely based on the 4-year cycle alone, which is really undeniable, anyone that denies the 4-year cycle is, a hopium addict, right? Because even just looking at the current price and how this current cycle played out, we topped to the day, right? So with that perspective, we expect the market to drop for 365 days going into that final bottom point. That should be at the end of the year, right? That should be around October 11th, even going into, November, December, right? Anything could happen. That could be extended by various different factors, MicroStrategy, whatever the case may be. But for me right now, I don't think Bitcoin's anywhere near a bottom, right? I think that we still have a pretty heavy couple of months ahead of us. And the way I look at that is the only reason I bring that up, Free Will, and the only reason why I'm looking at that is that just kind of helps me assess how I'm trading, right? So I am not holding onto any positions with high conviction towards the upside. If I'm taking a long position, it's a tight stop loss and a looser take profit, right? On the downside, we have a loose, extremely loose take profit, and less strict in terms of the thing, right? These are your mid time frame trades, your weekly trades, whatever the case may be, right? You don't have hyper conviction in any high up, uptrend in the market, right? You anticipate that the market's going to continue moving down, and over the last couple of days, um, post the break of $60,000 on that first attempt creating that low, uh, Bitcoin's just basically been consolidating and forming this little wedge formation, right? That's just currently how it's been for the asset. Even looking at an hourly perspective here, it's consolidation, drop, sideways consolidation, and I'm expecting the next drop to come very soon. From a measured move perspective, probably another 10% down. Yeah, which would obviously drive Bitcoin to that sub $56,000 level. I think would just continue to feed it into the next major support, which, as you guys know, is a little bit closer down towards $51,000, right? So 52 and a half, $51,000 at those low regions there. Bitcoin, yeah, Bitcoin is not in the best shape right now, so we'll leave it at that. Lower time frame going into it. Obviously, guys, we assess this now, and we're noticing quite a big move towards the downside on this market open. Let's see what Solana is doing. Solana holding up a little bit better. Still a little bit of a downturn, but it has had a little bit of a stronger performance, relatively speaking. 64 up into 72 post correction. Has a little bit more demand, but we do understand that Solana is trading within a very, very large liquidity gap that I think will drive that price down quite substantially. Or formation of a double top of a year as well. So let's see, pretty hefty resistance point of view, and obviously we saw the sideways consolidation as well, expecting that continued flush in Solana. I think Solana is going to lose $40 longer term, probably lose like that $20 region as well. Where do I think the Bitcoin bottom will be formed? I think that Bitcoin bottom realistically would have been formed at about $40,000 in that region. I just think that there's a little bit of panic that's going to set in. I would have liked to see a stock market or a convincing stock market top at this point in Bitcoin's correction. So there's still that heavy event that will drastically affect, hyper risk assets like Bitcoin and crypto alike. I would have liked to see a heavier correction on the stock market front as well, but we didn't, and we haven't yet. And then obviously, as I said before, we have ETFs still holding, and MicroStrategy's insane volatility right now, and that's a big chunk of Bitcoin, right? So a lot of people look at it. Let's just say, I can't remember what the percentage is, but let's just say for argument's sake, it's like 5% of the Bitcoin supply. The market moves preemptively to that capitulation, right? So just because it's 5%, that doesn't mean only 5% of Bitcoin is going to be affected. It's the market kind of anticipating that, and it becomes a massive cascading event as such. It's like a game of chicken. I'm trying to find some opportunities here for us. I think I'm going to go over to TradingView because right now I only support the higher time frames. We'll look on the 1 minute here. Some things that are happening in terms of the market in general. I know Ansem launched a token, which is so dirty, but that went to $120 million. And I think Ansem made something like, I don't actually want to guess the price. I saw something like $1 million SOL worth that he was holding at the peak of the market. But yeah, that would be pretty crazy. What's that, like 72 million? It wouldn't be too surprising. I mean, these guys do hold massive percentages of the thing. Obviously, you couldn't sell $72 million worth, but it's pretty crazy to see what kind of attention you can generate in this market. I really hope it doesn't become a thing. Across the board, Pump.Fun obviously generated a lot more volume over the last week. Last week, it had quite a strong performance. We'll try to see if there's any lower time frame opportunity there. Meme coins in general, that meme coin space, taking hits, and Ethereum is up a little bit. So, yeah, let's see what we can find. My platform right now that I trade on for these shows only actually does Bitcoin, Solana, and Ethereum. It's just because of all the daytime storing with the things. Anything in a lower time frame, not great. Ugly looking chart. So the strategy that we're gonna tie in here, I'll teach you guys a little bit more of it. Hopefully we can find something. We take the liquidity swings like that. Liquidity swings are definitely an indicator on TradingView, so you can do this. I built it off the back of like Dargo's liquidity swings, right? So anything that we do look at, if you're on TradingView, you can add liquidity swings. It's an open source system, and it kind of marks out everything for you, right? So it draws out these little key levels for you. Ethereum's obviously respecting this higher one year with 8.4 million in volume. We have the lower time frame one here at about 7.52 million. So as the strategy would go, what we'd apply here is we take our volume profiles, right? I'm going to do it to a 60 year. I'm going to change this to candles. Cool. So what we're looking at here is that formation. We'd like to see a little break of the structure sub 1550 and then a little retracement into these higher 1570 regions. And then we're looking to take that short position here towards the low. Okay. Or that continued move towards a low there. And it's about a 3.26% to roughly about a 0.8% risk there, right? So a good like 3R trade. And that's how that strategy works, right? We're going to kind of see how it plays out. Here's an example of that strategy working perfectly. A little bit higher up here, we had the sweep, right? This is where the level was broken. Retracement back perfectly into the POC, which is the yellow bar right there. And that obviously led to that push into the next liquidity wick, right? That was a good 7.4. We're trying to see if we can find anything of that nature start to appear again. But we can actually go lower time frame because it actually does work everywhere. Right here with the volatility that currently happened, it's never going to be too accurate. But just generally speaking, here as well, breaks the structure, retraces into the POC point, and then leads to that next 1.4% breakdown. That's really what we're looking for here. Chart Prime has a lot of free indicators. Yeah, they do. That is correct, my friend. If we're looking at this on the inverse on Ethereum, yeah, if we can find strength coming above 1570, higher time frame perspective, maybe we see something over here. Right now, it looks a little bit sketchy, but that 1570 point here on Ethereum is a strong enough support. On this lower time frame point here, there is a lot of volume buildup, as we can see, based on these previous volatility points. Yeah, we also haven't filled out the fair value gap that was set up here. So that's not a very consistent event to fill the entire thing. But we definitely know there is some liquidity on that side. Let's have a look and see what we're doing here. Yeah, we do have some orders trapped on the upside here. Yeah, kind of outwearing the downside. As you guys can see, if I hover over my thing, my order block, it actually highlights the point for me, and I can actually inversely highlight over the the chart, and it will highlight where we are in the order book here. So roughly about this point is where we'd be looking at. It's not a bad trade. It's a little bit risky based on the current volatility of the market, but let's see higher time frame if we can assess something here on Ethereum. There's a few things that are okay when it comes to Ethereum here. Let me just close these points out and hide out this fair value gap indicator. One of the things I like on Ethereum right now is we are retesting on this lower range point over here. We have obviously broken, we previously wicked or space below that. Now we're seeing a little bit of a deviation play. It's not necessarily a PO3 structure, although we do have similarities in terms of our accumulation phase right there, our distribution phase, which comes out at the bottom side here, or manipulation phase, sorry, the M in AMD, and then obviously followed by our potential redistribution phase, which is this one coming in. I think Ethereum's worth taking a look at above 1574 as a little intraday trade, right? Not something you're holding for the entire week, but just something to put a little bit of the trade behind. This is a big level for liquidity on Ethereum. Obviously, massive clusters here historically, and how Ethereum's been trading now, there's a relatively tight risk to reward trade over here, looking for these higher points here, potentially even going up into this zone right here. Optimistically speaking, obviously, as a final TP zone, we could potentially see that squeeze into 163 prior to any continuation to the downside. So definitely would be paying attention to Ethereum here from 1574. Invalidation probably below the low point here at about 1,560, like around this area right here. We could actually hold for a sweep of the low. Coming out of that point there, it's about a 1.3 to 4.3. So almost about a, 3 to 1? 3R? It's good. Volume is fine for me. Maybe check your earphones. Brother, the volume is a bit low. I'm using earphones as well. Guys, is anyone having a problem with the volume? Just let me know. Please make sure you guys are subscribing. Make sure you have liked the video. We got a small viewership today, small community, as you know, but we'll build it up and we'll do something special over the next couple of months as time goes on, as we start to build up this account a little bit. I do like Ethereum. Yeah, let's have a look and see what we can do from an exposure point of view. Strong enough hold at this point here. We did sweep, now retracing into the volume POC. It's okay. We have about 5 minutes left on that close, so we'll be patient about it. I do want to see a little hold above the region here. So let's be a little bit patient about it. Extremely, extremely volatile, irrational market that we've seen over the last couple of days as well. Huge liquidity swings. Bitcoin also, like if we're looking at Bitcoin as a proxy for the market, this recent little pullback here was quite hefty, right? Quite a massive rejection here from the $60,700 region. This was a little bit of volatility coming in about 4 p.m. This was actually roughly when MicroStrategy was set to announce their raise, right? And then they raised 1.15 billion. They didn't announce any buys into Bitcoin. I'm not sure if that's the correlation as to why the market dumped, but it did reject off the news. I know that the MicroStrategy news came out right about this point here. So thereafter, seeing a little 2.5% correction. It's quite heavy, right? Our next support on Bitcoin coming in at about sub 59, 58.8. We want to be very, very careful on that front because, as you know, for the vast majority of cases, the rest of the market is just a leverage bet on what Bitcoin's doing, right? Someone says the volume is little low. Let me see if I can turn it up. Okay, let me know if that's better, guys. It might be a little bit too high now, but you just shout and let me know. Josh, you think Jupiter, the OG small caps worth looking at? No, probably not. Probably not the best place to be right now, to be completely honest with you. I wouldn't be buying anything, right? If you're buying for a short-term trade. But even that, for me personally, and it sounds like the worst recommendation ever, statistically speaking, I like to be on the leverage or the future side of things, the perpetual side of things, right? This is where I kind of find comfort in this volatility. But from an investment perspective, I'm not chasing any trades right now. Obviously, I would have, enjoyed to be in Ansem pretty early, but it was on a Sunday for some reason. But yeah, like for the most part, I'm not looking at chasing anything or trying to follow any narratives into Jupiter OG small caps or whatever the case may be. I just don't recommend it. If I look at like historically when I traded in 2021, I made significantly more money in 2022, right? Those environments are really, really good. The rangy, repetitive trade environment where you're basically just grinding through the market and just building up small trade profits over there. If you're consistent enough and you put enough time into it, that's really where I tend to make more money, right? The volatility is not too aggressive. You don't get struck too much bar certain times. And if you follow good risk management, right, and really follow a system, they can be quite beneficial in these environments, right? Bull market environments, very dangerous, right? You get caught on the wrong side of a trade. You know, these kind of rangy markets here, really, really good, especially for like bot strategies and stuff like that. It's really good, right? Bot strategies work because they're repetitive, right? They're systems, and you can also do, um, yeah, you can also get some pretty decent results from building your own system that's not necessarily automated. I like this Ethereum trade. It's a pity about Bitcoin, but I mean, we might just take it just to heat up the account a little bit, right? Take a little risk. Fuck it, let's do it. We're currently trading with a. Let's not do too heavy, right? Let's just go with a $500 position over here. Let's see if we can turn it into anything. It's just a warm up of the account. 500 is probably a bit much on the current leverage. Why did I take $23 out? Just see if I refresh. I'll kind of have some fun with this trade. I don't necessarily recommend it. I think it's extremely high risk, but let's just have some fun. I'll assess the TP and stuff in a second. I like the demand that we're finding below this point here, right? Lower time frame, could be talking out of my ass, probably am. But I do like this demand that's on this lower time frame region here, right? Little support level here. A lot of volatility, pretty scary trade. But let's see. Probably grind on our stop loss here as a comfort point for now. You guys should be able to see my position somewhere around here. My entry, TP, SL should be okay. Okay, we did get our close. Did we close healthily? We did close healthily on the 30 minutes. Yeah, we did close okay. Let the volatility play out as it will. We do have a kind of a doji formation or thick body doji. Doji, for those of you guys who don't know, is when you have long wicks towards the downside, long wicks towards the upside, and a tighter body close, right? This would be an example right here. That would be an example right there. Actually, I do have an indicator that allows us to highlight them in purple. So these are all doji formations, right? We want the body to be less than 1%. So these are all doji formations here in different forms. The purple ones. I'll hide the volume profile here so you can see. And generally speaking, with these current ones, the first direction that they're filled, they represent indecision in the market, right? Indecision basically means directionless, right? Like an uncertainty. And generally speaking, whichever direction is filled first, that's a general strategy on the asset or on the play. Whichever direction is filled first is where you tend to move towards, right? So let's see how it works here. For 30 minutes open. Yeah, let's see. I'm not going to get too focused on it. Small account will grind it up over time. Let's see what's happening on the BTC front. Bitcoin still finding a lot of volatility at these ranges here. A stark rejection from the range high as well. Range lows quite significantly lower, so we've got to be careful of that. We have continued to form this little higher low formation here as of late. As you guys can see here, and then we obviously created the new higher low over there. So Bitcoin looks okay for the most part. Yeah, it's just a lot of volatility on the daily, on the intra-daily. BTC, if you were you to lose, if you really need to have spot, I wouldn't touch Bitcoin for spot. You don't have to have exposure to spot, right? It's a very, very big misconception. The concept is, you have to buy low. I personally don't think that Bitcoin's very low right now. I think it's still pretty high up aggressively. So I'm not really looking at any purchases at this point. I'd like to see Bitcoin scary low. Sub 50 becomes a little bit scary. Like, I just think from a general holder's perspective, that's where you really want to like tighten up. and really kind of reassess the portfolio. And that's where it kind of becomes a little bit more interesting to me. But these current price points, I think people are overacting. But I just also don't really see a world where I'd buy Bitcoin. Let's see, Bitcoin. It's lower time frame, yeah, consolidation is a little flaggy formation. Not great. Bitcoin's kind of stuck to these on the lower time frame as well, so we want to be careful of those. We'd like to see a bit of a stronger recovery post market open. Let's see what's happening on the Nasdaq. They're okay. Since market open actually opened a little bit up here on the Nasdaq, SPX. Let's go to ES Mini. Yeah, strong enough performance on the S&P 500 futures. So we're not having a macro pullback as such. She used to have this indicator where it would show you the reoccurring performance at market open per day. It was a good way to find patterns as such. I did open a position. You can see it in the top left of the screen. It's literally at entry. It's an extremely small position, and it's a position to just get the account going, right? Get some exposure to the account. It looks okay. Not the best looking trade of all time, but we'll see how it plays out, right? Very, very minimal risk. Tiny, tiny account, right? We're starting the account from $99, as you guys can also see in the top left. That's currently the size of the account, and we're going to slowly grind it up as if this is our main account. It's a 20x position because we're looking to save a little bit of liquidity, and we're not looking to risk about more than 5% of the account, right? So when we look at it from a leverage perspective, it's kind of irrelevant, right? You need to look more at how much you're exposing in terms of your account, right? So I'm going 20x leverage, but I'm risking like $5 of the account. I'm not doing 20x leverage the entire account. It's what's it, $500 position, so that's roughly $30. What 20x times 30, yeah, it's just like $25. Yeah, that volatility starts to creep in again. Now we're sweeping the low here on Bitcoin. Want to see if we get a close below, then we can kind of pop out these volume profiles here, potentially take a slight hedge position here, just based on the strategy in general. We'd really like to see these bids being caught over here. Nice close above. What's so interesting is you've been trading for like a certain amount of years. Obviously, when you're looking at a very, very low time frame chart, like like a 1 minute chart or like a 5 minute chart and stuff like that, it's very difficult to get excited by the moves considering how small they are in terms of a volatility perspective, So you don't really get excited about it, but when you're doing a live show, you got to make it seem like a slightly bigger deal than it is. Like, oh, volatility is coming in here again. And looking at that candle, but it's down like 0.3%. Leverage, look, someone says, I agree. Sorry, Free Will says, I agree. Leverage is irrelevant. Just funny to go 20x. Yeah, leverage is irrelevant unless we're looking at it from a liquidation perspective, right? In this example here on Ethereum, which is down a little bit, the liquidation point would obviously be the big concern, right? We're fine because we're protecting our downside with the stop loss. But yeah, we really hope Ethereum can catch something over here. It's just a little bit weak, right? This Bitcoin drag is aggressive, so to speak. Lower time frame. I mean, we did sweep the level here. We are retesting the underpoint on that side. Go to auto mode here, so we'll zoom in a bit. Let me clear out some of these lines here. It's okay. It's just a sideways consolidation here. Not necessarily the best of executions, but as I say, we have some fun with it. Solana as well. Solana's kind of beating down slightly. Solana, another one, it did come back into the previous POC point over there, then did bleed down 1% again. So pretty solid on that front. Um, but yeah, generally speaking, I'd like to see Solana retrace down to this point of about 73. Maybe there's some exposure to take on that as well. Let's look at a higher time frame. Yeah, Solana coming down into these levels here is quite interesting. Right, so this would be the same strategy on Solana, right? We get the little break over there, retracement into the POC over here, and catching that small bid. This would kind of be your defense line for Solana as that goes. As far as that goes, it's not the greatest level of support, but historically has held up pretty decently, right? When we're looking at these lower time frame trades here, it did break the previous high as well, which is exciting. So let's see. Solana's obviously been a little bit of a stronger performer in this little liquidity gap. But that's the thing with liquidity gaps at the same time as well. That increased volatility and irrationality within those zones due to the lack of support and liquidity that's historically been placed there. You got to take those things with a grain of salt as well. But Solana looks okay. Let's drop it down a little bit again. We'd like to see a little bit of a stronger bid being caught here. There's a strong flush over here. We did grab a little recovery on that front. Let's see what we can find on the higher time frame here. From a TP perspective, I'm just going to set it and let it go. We're going to look at like that as the high, but we'll set out some smaller levels within these little ranges here. I actually think it's better levels, but yeah, let's just set it over here for now. Oh, streams already been going for a period of time. Guys, just let me know in comments. Obviously, comment post the show, comment during the show. If there's if you guys like this little format, it's not exactly like we used to do on the previous Telegram channel, of course. There's quite a few differences on that front. But just let me know if you guys like this format, going through some charts, looking for little trade opportunities there, kind of highlighting the POC similarities, indicators, etc. You just got to kind of keep me up to date with your thoughts on that. So let's see from an order block perspective. Liquidity is pretty built up where we're currently sitting, right? The book's kind of stacked on that. We don't have any huge gaps down. I mean, I guess the 153 is bad, but yeah, we'll keep an eye on it. I kind of want to also extend it to a Telegram group sooner rather than later so we can continually update. So we don't have to kind of rely on how the chart performs during the live stream. Because I mean, now just set up, just start waiting. Let's see again. Go back to Solana. BTC, what are we doing here? Bitcoin's obviously bleeding quite significantly more than the rest of the market. So relatively speaking, holding up okay. Let's look at the BTC situation here. No, it needs to be ETH BTC. Yeah, I mean, relative performance up slightly. Is pushing higher over the last hour. Bitcoin has been a bit of a drag. Can you please explain how to use liquidity sweep for trading? I'm going to have to do it on the next stream. which we'll do on Wednesday. But yeah, we'll do our streams. It's not a problem. We'll do all the education. Just make sure that you keep it in mind. But liquidity swings, just to do it's liquidity high. It's based on the amount of volume traded and liquidity at that point in time, and they set range levels for you. So what you're looking at, very similar to a range breakout, right? A range breakout is a buildup of liquidity of a horizontal period, and once we start to break up, it's a horizontal block, order block, right? And once we break through that region, that's where we create a slight version of a liquidity sweep, right? It's a swing, right? And in many examples of a range breakout, you're looking to either trade the swing failure or the, you know, the RS flip, right? Or the SR flip, depending if it's up or down. Okay. Look, I don't think anything's going to happen now. Obviously, it was just a warm-up trade. So I don't expect it to go perfectly or go well, but just get the juices flowing, get us into the vibe of actually taking the trades live and having fun with it. Bitcoin, obviously in hindsight, what we're looking at here, because we always just want to be fully assessed on these positions here. Ethereum was a high risk trade. We knew it going in, but the way we're looking at it here, you know, and the big kind of approach or the thing we're looking at in terms of difference maker here, big also volume cluster here on, order block here on the range low here. So we can see if we use the order book here, perfectly going at about 58.80. We can expect a little bit of buy pressure kicking in here, right? So if you're looking for that next trade, maybe you didn't take the Ethereum trade smartly, you're looking for something like that from Bitcoin, just from a volatility perspective. It doesn't necessarily matter how high it goes, although we do have some fair value gap towards the upside here, so we can target a recovery back into 60,000. And just hoping at that point, there's a big buy wall here. You know, relatively speaking, when we look at the order books here, we have a few towards the downside as well. At these liquidity lows right here, as you guys can see. You'll probably find quite a few at that point, but on a lower time frame perspective, we could see a little bit of buy pressure returning over here. We do hope that our Ethereum position holds for that period. Maybe we catch out a little break even. If Bitcoin does catch a stronger bit at these regions, maybe we start to push towards the high again. But just generally speaking, what we obviously knew going into the trade was that Bitcoin wasn't performing very well, although we had relative strength on the Ethereum front versus Bitcoin. You know, it's just probably the takeaway. If assuming the trade doesn't go, you know, as we'd like it to go. Not that it's quite early still, right? There's still a very, very volatile little period in the market here. So let's assume or take the assumption that the trade doesn't go right. We obviously do the correlation towards how Bitcoin was performing at the time and kind of seeing that weight and how the rest of the market is effectively a leveraged version of Bitcoin, right? It's very rare that you're going to see Bitcoin drop and the rest of the market start to move towards the upside. Bitcoin plays as a proxy. So just keeping that in mind for future trades as well, just in generally speaking. Obviously, for me, it's just a little gamble and having some fun. But anybody else that is trying to learn from these trades and kind of understand, you know, what the lesson was, assuming you fully were convicted in the trade or whatever the case may be, that's how we look at that, right? We address it from that point of view. And I think, obviously, in this example, the weight on Bitcoin carried a bit heavy through that position on Ethereum. Feel free to close the position on Ethereum. I'm just going to leave it as is. You know, make or break. We either make $15 or we lose $6. Like, I'm not too concerned. But yeah, let's see what happens. Guys, thank you so much for joining me here today. I hope you enjoyed the show as much as I did presenting it. Bitcoin looks like it's going to hit that buy wall there of about 900 Bitcoin, aka looking at our thinking about $55 million worth of buy pressure coming in here. Pretty small, relatively speaking. But let's see what happens. That's another little opportunity for you guys if you do continue to trade the market and looking for those opportunities. So much love to you guys. Stay safe, trade safe, and I will catch you guys all again on Wednesday, market open, little 15 minutes before market open to talk shit. But let's see you guys on the next one. Much love, guys.